Lawrence Belanco, technical analyst, technical research at CLSA, joining in from the sidelines of their India conference. Lawrence, hi, good morning. Good to have you on the show.
Morning, thank you.
Right. Lawrence, just wondering, the gush of liquidity, FIRs have managed to pour in about $5.5 billion month to date so far in November, and that's surely keeping equity prices a little inflated. Where do you see the next levels for the Nifty? We're practically, in any case, at all-time highs.
Yeah, that's right. I mean, I think that the key thing to understand is that we've seen the Nifty break out through the highs that we made in 2019. So that resistance zone, which was roughly at the 12,300 area, we've cleared that. And we're really focusing now on 13,500 to 13,700 as the next target level. In the near term, markets are extended if you look across global markets, that is. But I think the key takeaway is momentum has confirmed these highs. So we think any pullback, particularly back to the old breakout area around that 12,200 area for the Nifty, would be an attractive entry point for the trend to continue.
Sure. Lawrence, I'm going to pick up on the point on what is going to lead the rally from here, because something very interesting is happening, and again, that's a phenomena across global markets as well. The sectoral churn. IT, pharma, which were the leaders which snapped us out of the March lows, are taking a bit of a breather, and it's banks which are fast catching up. Do you think that the next leg of the rally in India is going to be driven by banks?
Banks have been key drivers for the Nifty since 2016, and it's really only the sort of past 6 months that we've seen that underperformance. We have seen the banks in relative terms over the past 3 months at least base out relative to the Nifty. And yes, the global rotation that you've seen into the more value side has seen the Nifty banks sort of resume that leadership. We've cleared the 200-day, and the next resistance zone for the Nifty Banks Index is at the 31,000 area. And as far as leadership goes, I do think it replaces the IT sector as a key driver for the Nifty on the upside to new highs again.
Okay. Lawrence, in terms of in terms of some of the key names that have been driving this rally forward, do you feel that they are peaking out? Where do you see opportunity now going ahead?
I think sort of a fresh opportunity outside the banks is in the Indian auto space. So we have seen some of the laggards there after a sharp recovery off the March lows. And a number of stocks like Tata Motors or Eicher Motors had been consolidating for the past 3 to 4 months, and we've now seen those stocks break out of those trading ranges. So if you're looking for sort of fresh breakouts, I would look at the Indian auto sector. And then outside of that, you mentioned Reliance in the introduction, rolling over and underperforming. We've actually seen rotation into the small cap index. So if you look at the Nifty small cap index, that had been consolidating since September, post the recovery of the March lows, and we're breaking out of that trading range. So we've basically seen more participation in rallies across global markets. And in India's case, you've seen it down to the more cyclical sectors, as well as it filtering down to the small cap space.
The word. Have we snapped that line with Lawrence? I'm not so sure.
Okay.
Okay, great. I was actually going to ask you about Reliance in any case, but good you talked about it yourself. The other story of the sectoral churn, although it may not have a huge Nifty bearing, is what we're seeing, Lawrence, in autos selectively, especially the two-wheeler names. Some of the cement names have been doing very well. And the theme that you just talked about, that you see a faster small cap, mid cap recovery as opposed to the benchmark Nifty, does it tie in well? And within small and mid caps, do you think autos and cement will continue to lead as well?
The autos and cement, autos from a chart side really sort of stand out as continual leadership. So within the mid and small cap space, yes, I think autos will continue. The problem with the cement longer term charts is that they've really been in these cyclical trading ranges over the past 3 years, and we're heading towards the top end of those ranges. So I prefer the autos over the cement side. And the broadening into the mid and smaller cap space typically gives the rally more sustainability and more durability than just being in a narrow part of the market. So we think that is a constructive develop in global markets, not only in India.
Sure. Lawrence, while FMCG in particular has always been a valuation story, but after the recent correction that's played out, where do you see charts of a Nestle, a Britannia, ITC actually hold?
Yeah, I think RTC, at least on a chart side, is a real sort of battle. It struggles to get back above its 200 days. So we think that looks, at least from relative perspective, as an underperforming stock. Britannia, I think, is one of the standouts within the space. It had been in a trading range for 2 years. It's broken out of that range. Recently, it pulled back to the breakout point. So we think good risk-reward entry point into the stock where Nestle is more of a neutral trading range outlook at this stage. So out of those three names, Britannia stands out.
Interesting. I wanted to get your view on metals as well, Lawrence, and whether you see precious metals really emerging as a strong theme from here on.
Well, if we look at the longer term setup, particularly on gold, we had an important breakout in January 2019. We still have a longer term upside target from that breakout of 2,200. But if you're looking in the very immediate term, both gold and silver, we see trapped in shorter term trading ranges. And there is some risk to correct back to their 200-day moving averages. So in gold's case, that's a move back to the 1790, 1795 area. That's where longer term trend is, and that would be a better risk-reward entry point and buying gold right now. So we see it more range-bound into year-end before that longer-term trend can resume with an ultimate upside target of 2,200.
Lawrence, hi there, morning. Just wanted to also understand your take as to whether or not you're seeing any potential within the oil and gas sector as well. We've had quite a bit going on there, and it seems like, I know you spoke about Reliance Industries, but whether or not you see any other opportunity and what your outlook is in terms of how we could see crude prices as well settle.
Yeah, so, the energy space globally, energy sectors are still roughly 40% down from their 52-week highs, and the sector that has really dragged on a global standpoint as well as within the Indian market, the Reliance performance. If you look at the underlying commodity in Brent after this sharp snapback rally off the March lows, we've already settled into a trading range where the bottom of that range is at $36 to $37 on Brent oil. And the top end of the range is up at the $48 to $50 area. Now, we tested the bottom end of that range roughly 2 weeks ago, and we've seen the rally off the bottom end of that range. And we think in the near term, oil can continue to improve towards that $47 to $50 area, but it's likely to be capped there. So think of oil in a stable trading range environment. And then it's selective across the stock side. I think that there's some opportunities within the space, but unlike autos and banks, I don't think it's going to be a leadership space.
I would have asked you about Bitcoin, Lawrence, but I'm not quite sure. You tracked that one. But anyway, that aside, what is it that you're making of this phenomenal pharma rally that's playing out? Although of late it's consolidated, as has IT. But do you have the same kind of conviction, Lawrence, when it comes to the long-term prospects of pharma, and any charts or any stocks which are standing out in particular? Because what we've seen is an across-the-board rally pretty much.
Yeah, so I'll answer the question on Bitcoin first. I mean, it's quite an outstanding chart. If you look at it since 2017 highs at that 20,000 area, it had consolidated into June, and we've broken out from that. And that breakout gets you into the $25,000 area as an upside target from the move. Short term, we do have, again, extended momentum reading, so look for a pullback, but we think Bitcoin can trade into 25,000 over the coming months. On the pharmaceutical side, I think after being great leadership like technology, we're likely to go into a consolidation pattern. If I look at a number of the stocks from Cipla through to Sun Pharma, Dr. Reddy, we started to see some slowing upside momentum. So we think the space will enter a consolidation phase, which will basically consolidate the strong gains that you've seen over the past 6 months, but going forward over the next 3 to 6 months, more of a trading range environment for the names.
Lawrence, if I had to ask you, give me 3 scripts where you think a sizable amount of money is going to be made in the next 1 year, and you can include Bitcoin and even gold in there. What would be your top 3 picks, including India stocks?
Well, so let's start on a macro side. I think on a global allocation basis, I think emerging markets has the best chance of re-rating versus developed markets. We've seen that relative base develop over the past 6 months. We've broken out that in relative terms. So I think emerging markets will be an outperformer versus developed markets. I think obviously China will be a key driver for that relative re-rating, but I think you also have to look at some of the laggards within the emerging market space. And one of the best markets for that laggard trade within emerging markets is the Brazil setup. So if you look at the MSCI Brazil chart in US dollar terms, that has been consolidating since June, and we think we can break out from that point. And then you got to look at the China internet names as another space. So that's what I would sort of focus in on the macro side: emerging markets, China, and Brazil as a laggard. If I focus in on the India side, I do think the banks, as I said earlier, stand out as leadership there. So ICICI, Axis Bank, and then as the laggard within the banks, I think State Bank of India is one to take a look at. And then the most immediate breakout that we've seen in the Indian market is that the auto space and Tata Motors and Eicher Motors, the 2 stocks that stand out there. So I'd break it down into those 2 categories of macro and then the India particular selections.
You know, we've been seeing a lot of traction as well within the pharmaceutical space, Lawrence. We just today had the listing of Gland Pharma and quite a bit of interesting investor response coming in. This is a sector that has been, of course, plagued by issues with respect to the US FDA, but by and large has seen the domestic business perform well. Lots of long-term potential too within the pharma space. Is this a pocket that interests you?
Well, it's not standing out on a chart basis at the moment. Like I said earlier on, we've had a good recovery year to date, good performance year to date, but we see it more in a consolidation phase, consolidating those strong gains that it's made year to date. So, leadership into 2021, it doesn't really stand out. As I said earlier, banks and autos look more appealing.
Lawrence, it's been a pleasure chatting with you. Appreciate your time, and you've really given us an insight as to what your outlook is on the markets as well as potential sectors.